Hi, everybody. Scott Riley, the Market Update Desk, NMLS number 157524. It's January 8th, and we have an unexpected guest today. If you look outside, you're going to see something we haven't seen for a little bit, and that is a sunny afternoon. And we're seeing green grass on the ground, and that is definitely bringing some buyers out in the market. So we love it when the sun comes out and surprises us. Got a couple of reports today that we wanted to review. Um, Exports rose and imports fell on the most recent report that came out today. The trade shortfall was just 29.4 billion for October. That's down 39% from the previous month. Exports increased by 2.6%, while imports slipped 3.2%. The total was the lowest since the second quarter of '09, and that was coming off the financial crisis of the Great Recession. So that trade imbalance definitely helped the bond market a little bit out of the gates this morning. We did also get something that brought a little bit of pressure to treasuries this morning. President Trump indicated he wants to increase in defense and spending by about 50% to $1.5 trillion. Now, this is concerning to the Treasury bond market because the more that we spend, the more treasuries have to be sold, the more supply out there, the harder it is to absorb, and the price that we have to give to purchase those treasuries has to increase. So there was a little bit of pushback from that aspect this morning. Q3 productivity rose 4.9%, much higher than the 3% that the market was expecting. And in addition, Q2 productivity was revised upwards from 3.3% to 4.1%. Much of this is being attributed to efficiencies within the AI applications and how that's being implemented at many of the different work and industries across the board. Unit labor costs also continued deceleration, and that fell 1.9%, better than the decline of 1% the market was expecting. Another report that came out today was the initial jobless claims. We weren't sure how to plan on this because we did have a holiday week last week, and that does sometimes affect these filings. Looks like the initial claims rose by 8,000 to 208,000 overall. Continuing claims did jump up more than expected, rose 56,000 to 1.91 million filing for continuing claims. Another report was the Challenger Jobs Cut report. That shows that there were 35,333 job cuts. This was the lowest in 17 months. The hiring plans did rise by 10,496. It's not a super strong number for job hiring plans, but it is in a positive direction. So that's the part that is good from that. Now, we're watching really closely the 10-year Treasury. We've been bouncing around, as we've been talking about, from the 4.11, 4.12 mark to the 4.20. We did yesterday get down to about 4.13. We did jump up today to 4.17 on the 10-year. We're kind of unsure on what's going to happen tomorrow with that all-important BLS report. There can be a lot of different reads into this BLS report when it comes out, and then diving into the numbers. What's the headline? What's the unemployment rate? What's the all-in unemployment rate, which is the U6? And then what was added or subtracted from the birth-death model. So there's going to be what comes out right at 8:30, and then what the market dissects from that. So maybe we get a little bit, less than expected, and that's going to move us in the right direction for mortgage rates. One thing within that report we'll watch very carefully is the unemployment rate. Right now, that sits at 4.6%, but that's only because it's being rounded up from 4.52. So there is a probability we'll probably fall slightly in the unemployment rate, and that's something the bond market will trace very closely. Give us a call. We're seeing a lot of activity come out whenever the sun comes out, whenever the green grass comes out. We'll run numbers, help you understand what programs are available that you can leverage for your benefit. Give us a call, 616-293-2189. Have a great afternoon. Oh, by the way, yesterday was National Alaskan Malamute Day. Just thought everybody would want to know that. Take care.